Hello everyone, this is Houston, and welcome to episode 22 of Trading Edges. In this week's show, I interview Steve Ward.
So, I think for all traders, one of the big challenges, and this is where I think mindfulness has quite a bit to offer, is in this relationship between what we've got aversion to and the impact on our trading behavior. And, on the flip side, being more open to that, being more willing and more accepting of that experience and learning to be open to and experience and manage those discomforts. And I think when people can get to that, that's where they can see real tangible shifts in their trading behavior. The challenge with suppression, whether it be of an impulse or whether it be a thought or whether it be an emotion, is that suppression is energy hungry. We've all got moments in trading where we're more at risk than not, so once we know what our crucial moments are, they're the times to check in. What's going on in my body right now? What's happening with my thinking right now? What's going on with the feeling system? Because the more aware you are of any of those 3 points, the less influence they have on you.
From the outside looking in, it can sometimes appear that peak performers have an elusive talent or skill that sets them apart from the rest of us. However, what usually sets peak performers apart isn't what they can do, it's what they will do. You are listening to the Trading Edges podcast, the podcast dedicated to seeking and sharing the best ideas and principles from peak performers across all domains of performance and achievement to help you discover your full trading potential.
Happy New Year everyone, and welcome to the first episode of 2016. And in this show, I had the pleasure of chatting with Steve Ward. Steve's a well-known performance coach and has worked the gambit in terms of working with peak performers. He's worked across numerous domains, including with sports athletes and most recently with some Olympic athletes at the London Olympic Games. As well, he works with institutional and professional traders. Steve's also an author, and in his latest book, TraderMind, he integrates the concepts of mindfulness into this world of peak performance and high achievement, especially as it relates to trading. I really consider TraderMind to be one of these new breeds of psychology books. I call them, Psychology 2.0 books, and it's really one of my favorite titles currently around trading psychology. And you can find it on my top recommended books list on the blog. So having worked with so many peak performers, in this show, I have the opportunity to really pick Steve's brain, and we get to explore many topics which I find fascinating. For instance, we talk about the shared habits and routines he's seen across many peak performers, the importance of energy management, which is actually just a topic we covered in our previous podcast, episode 21, the traits of top traders, and some edges we can all explore and perhaps even develop. This idea of marginal gains, or you may have heard it as being called the small gains approach. Mindfulness, this idea of intuition versus impulse, and much, much more. In the end, there was this one theme that kept popping up over and over again in my mind. So let me pose it now in the form of a question. What can you and I do to better cultivate awareness inside and outside of trading? I've been giving this a lot of thought. Awareness boils down to being able to objectively tune into what's showing up for you while you trade. That is your feeling and physical states, your emotional states, and your thoughts. And then layering on what's objectively happening in the markets. Unfortunately, for many of us, we operate disconnected at times from these states and ultimately are hostage to our feelings, emotions, and thoughts. Again, many times this results in things like being unable to remain disciplined or impulsiveness or feeling anger or fear. and then acting those things out. As you'll hear Steve say in the interview, the more awareness you have over these three areas, the less influence they have over you. As always, I hope you enjoy the show. You can find the show notes, transcript, and more resources at thetradingedge.org/episode 22. And again, if you're enjoying the podcasts, please help me by leaving a positive review on iTunes so that other traders can find our show. Now, on to the show. Welcome everyone to episode 22 of Trading Edges. And I've been a long time follower of today's guest, and I'm very excited to get a chance to pick his brain today on today's show. And so on the podcast today, we have Steve Ward. And Steve Ward's a trader performance and psychology coach. He's had extensive experience coaching athletes across numerous domains and numerous sports, as well as coaching traders now. He's the author of numerous titles, including one of my favorites, TraderMind and High Performance Trading. So welcome, Steve, to the show.
Thanks, Houston. Thanks for inviting me. Good to be here.
Yeah, of course. It's great to have you on. So I gave you a brief intro to your background and how you kind of got into or kind of the work that you do. So maybe you can just first begin by sharing what you do today and how did you get into the world of coaching traders? Okay,
so I've always, I guess, had a fascination with performance, and initially more from a physical side, and then from later years from the psychological side. So I started off working in sports and performance psychology, as you mentioned, worked in about 33 different sports with athletes and teams at national, international, Olympic level all over the globe. Thoroughly enjoyed that, did some performance psychology for kind of high achievers in the corporate world. And then literally purely by randomness, bumped into a guy on a sports psychology course who was a sort of a semi-pro tennis player, but also happened to be a trader. We exchanged some emails following the course around his tennis, and then he invited me to London to really, I guess, come and see, could sports psychology be useful for traders? He felt it had been useful for him as a trader and a tennis player. And so we did some workshops, did some one-to-one coaching. I actually ended up doing 3 days a week for almost a year with this trading firm. And I was really hooked. The first day I turned up on the trading floor is first Friday of March 2005, non-farm payrolls. Can remember it, literally as clear as anything now, just, the countdown to the number coming out, a deadly hush, then an eruption of noise. and then really through from 05 through into 06, spent more and more time working with the traders, got some more requests to work with other trading firms and banks. And really from 2006 onwards, probably after the Winter Olympics at Turin in 2006 and a bit of work in rugby, pretty much transitioned to the markets world. So since then, working with investment banks, hedge funds, investment funds, prop trading groups, energy companies, with the retail trading community, doing sort of graduate training programs, doing, performance enhancement programs, workshops, coaching, really a whole variety of projects, all, I guess, in a similar vein to what I was doing in sports psychology, which is around, trying to teach the psychological skills and approaches to enable traders to get the best out of themselves.
And what have been kind of the lessons learned there? So have you been able to transfer a lot of the domain expertise from, let's say, the sports psychology world and the performance world over to the world of trading? Are there a lot of similarities in terms of the needs that traders have and kind of the areas that they need to work on as an athlete would have? Is that transferable?
It's a good question. I think there is some transferability. So certainly in the early days, because obviously all I knew was sports psychology, I had to kind of work from that domain. What you realize pretty soon when you get into the trading world is obviously trading is a very cognitive activity. So whereas in sport you're almost trying to quieten the brain down and turn it off a lot of the time, turn down the chatter. Right. In the trading world, that chatter can become quite important. So there's a difference there. I would say probably now maybe 30%, 40% of what I do still come from kind of what I would call the sports performance psychology domain. And then, what's been added into that, which is different, is the work around maybe from the behavioral finance and behavioral economics around, decision making under risk and uncertainty. I think there's some really interesting work from neuroscience, which is really relevant maybe to the trading domain, not as relevant into the sporting domain. So that's been a big interest of mine for the last 6 or 7 years particularly. I think around the stress system and the stress physiology system and what happens at kind of the highs and lows of trading. Again, whilst we get some of that in sport, I think there's a real uniqueness to that also in trading. So it's been a bit of an evolutionary process from, I guess, a core working model of sports psych and performance psych, and then adding into, I guess, much more of the I guess, a neurobiological type picture to bring into that. So, yeah.
And so what have you gleaned so far? So, in your past 10 years, so can you speak to some of the kind of the performance habits at some of the peak performance traders? So what do you see as some maybe like important practices or rituals or routines that some of these, peak performing traders that, share?
Yeah, so I think there's a few things really. I think the one thing, and this is probably as true in sport as it is in trading, but I think in the early stages, in terms of kind of peak performance habits, the most important habit is the habit of practice. And, I think learning the skill, learning the game, learning the craft. And I think what you see in peak performers, for whatever reasons, probably a motivation, a passion, an enjoyment for what they're doing, is you see extensive time spent in practice. And we would see that across chess, across trading, across sport, across music. So I think the key habit early on is the habit of practice and learning the craft. As you become more experienced, actually, that habit doesn't go away. So, so the learning habit is a habit that I see right through into my most experienced, the most successful trading clients. They're still active learners. Learning about themselves, learning about the markets, learning about different strategies, learning from other people. So I think there's a learning focus as a habit to build. Nice. I think if we look at kind of more perhaps discrete performance habits, probably the two key ones, which I think make a big difference in trading, are habits around kind of preparation. Yeah. So how you prepare yourself, for the trading day or for the trading session, in terms of technical preparation, tactical preparation, and then obviously mental, emotional, and physical preparation. Mm-hmm. And I think probably another key habit is around evaluation, analysis, reflection. Yeah. And what's done there in terms of trade journals, trade logs, looking at trading data, looking at the patterns. So some kind of analytical type habit I think is really important. Then around that, I think also for experienced traders there are habits around lifestyle and how people blend trading and life and how they manage those two areas of life. I think that's important habits to build. Habits around energy, looking after yourself and making sure because the brain's sitting inside the body, the brain can only function really as well as the body allows it to in terms of fueling and so on. So so I think there's key habits around energy management which are pretty critical. And then I think around that, then we've got the other kind of peripheral habits around what we do in terms of maybe mental techniques or emotional techniques and so on that kind of wrap around that on the outside. Yeah.
And we don't hear a lot of talk about energy management inside the trading world, and I think it's a bit of a shame because outside of other domains like sports specifically, they're very cognizant of managing energy. And it seems the old school traders, they don't even think about energy management, right? What's your feeling about how receptive are traders now to that topic of energy management? I guess once you tell them about it, they get it, or are they people still a little bit reluctant about taking up some of the practices of energy management and renewal?
Yeah, it's a great question, and I think there's a couple of things, Houston. One is that there's a growing appreciation for the role of energy overall. I think intuitively we all know that when we're tired or when we're a bit run down or when we're low in energy that
we're hungover or whatever.
Well. So we know that intuitively. Yeah. I think what we've got now, which makes the case more compelling, is we've got strong neuroscience research that makes very clearly the link between energy and decision making, but also energy and things like willpower and self-control, as we might call it, discipline, between energy and attention and focus, between energy and emotional regulation. So as I say, we've got this embodied situation where the brain's sitting inside the body. So, the brain is 2% of our body weight, and it's about 20 to 25% of our energy consumption. So, the brain's pretty energy heavy.
Yeah.
And, to function, particularly where we're using higher order functions like attention, focus, decision making, prioritizing, self-control, it's drawing down on the fuel it's got available. So obviously the more fuel we've got available, the better we're able to do those higher order cognitive tasks. So that fuel is coming from the body, particularly obviously primarily through glucose. So, we need to make sure the body is energized to enable the brain, to be at its best. And I think, whilst we do that, I think now, as I said, thanks to the neuroscience research and also some work I've been doing around physiological monitoring of traders, looking at, levels of stress versus levels of recovery versus levels of physical activity, looking at sleep patterns, we can very clearly see the differences in people's trading performances when they're, energized and recovered and slept well versus when they haven't. So, having that objective and that research, backing has made that case much more easier to sell, I guess.
Yeah, no, that's a very good point. And I think it's just kind of loops back to the short conversation we had before we started recording, but this idea that you mentioned about capability versus capacity. Maybe you can share this distinction for people.
Yeah, I mean, it's for me, it's kind of the I guess it's the elevator speech about what I do. I guess that's how I kind of explain. It's if we look at performance, in terms of two dimensions, capability. Basically, obviously having the ability to do the job, do it well, skills, knowledge, and obviously in our trading world and investing world, strategy. And then the other dimension being basically capacity, which is which is having the mental capacity in terms of attention, focus, mindset, managing thinking, the emotional capacity around, managing and regulating emotions, dealing with stress and pressure. And then, then the third one, really, the physical capacity, having the energy available. Yeah. And if you can have, and I see this in clients, people with very high capability, but with low capacity. So that's the classic underperformer. What we want to be really is, I guess if we look at, who would be the most successful traders, they would be the ones with the highest capability. And also, they would also have to have the highest capacity.
Right.
And obviously my role primarily, I guess, is a function of increasing capacity. That's where I'm trying to get the most out of people. Obviously, there is some capability in terms of psychological skills, I guess. There's an element of crossover, but we can also probably see it as kind of two discrete core areas as well.
Okay. And so the work you do then around improving capacity, do you get as granular as, creating diet programs for people and, recovery programs and that kind of stuff? Or is it more higher level where it's kind of teaching people, okay, here's kind of the fundamentals of improving your, your work capacity? What's the type of work that you do there?
Yeah, so I do get pretty granular because I've got quite an extensive background in sports and fitness and physiology as well as in psychology. So I'm pretty fortunate that I'm able to kind of get pretty granular. So I wouldn't go down to an actual discrete particular diet program, but we would certainly look at the key building blocks of, for example, we've got what's called the ultradian performance rhythm, which is basically a daytime cycle, approximately 90 minutes to 2 hours to kind of peak energy, followed by a natural 20-minute dip. So we would look at that kind of cycle, how we might integrate that into the trading investing day. We might look at when would be key times in the day to take recovery. We'd look at particularly, when might key times in the day be where the trader knows they're going to be under high load, under high cognitive load, to make sure that we've got fuel available. We'd look at where I guess how we get a constant stream of energy through the day, so we're kind of avoiding peaks and troughs in energy flow. So we look at food groups and what foods maybe are more useful or less useful, but I wouldn't go into here's the exact food to eat at the exact time on a Monday to Sunday basis.
Gotcha. So more like, that makes a lot of sense.
Yeah, I would say probably key principles, I would say, is probably where I get to. That's probably as granular as I get down to. So give them a framework and some kind of key guidance, and then let them kind of play around with it a little bit and personalize it themselves.
Yeah. And it sounds like the folks that you're working with are, and I think most traders are this way if they've been in the business for any amount of times. They're a pretty motivated group of individuals, right? So do you find things, even if, you're very motivated, do you find things that continuously trip up very motivated individuals? Are there things that just, kind of get people blocked or stuck?
Yeah, there can be a few things. Certainly one thing over, I guess, the last few years has been for experienced traders, when things change, when market conditions change, that's a big tripping block for people. So, they've been successful trading in one way, markets change, then suddenly, you're doing the same thing, but you're not getting the same results. And as we all know, it's always hard to know, is it a temporary change? How long will it last? Do I need to change now? Do I wait till next week? So, psychologically, the uncertainty that comes with that change is very challenging for experienced traders.
Right.
Obviously, losing runs, which could be a function of change or other factors, but, losing runs psychologically very difficult for some people.
Yeah.
Winning runs, of course, there can be equally as much of a factor that can trip people up. The overconfidence and the euphoria that can come from an extended winning run, complacency. So I think, at the higher end of the spectrum, it tends to be, some kind of change event, or it tends to be where the nervous system is being stretched towards the extremes, either towards the above average wins or above average losses.
Mm-hmm. And a book that came to mind when you were talking about that was just that great book, The Hour Between Dog and Wolf.
Absolutely.
That talks, that has that great story of, a number of traders having great runs and then followed by disastrous runs. So
yeah. And then we see that all the time. Obviously, I guess I'm working with thousands of traders a year, so you come across the similar patterns. And that is, for lots of people, it is a repeatable pattern in terms of runs of profits followed by runs of losses. And then it gets down to position sizing, how we manage our position sizes when we're winning versus when we're losing. There's a whole number of factors that all come into play. But again, that's part of the fact we've all got a very similar nervous system. So
Exactly.
when we're winning, we can't help but get a bit excited. That's what the nervous system does.
It's the physiology, right? Exactly.
It's physiological, exactly. So it's biological. It's outside of our conscious control, and this is where training and over time and experience and having some techniques, so the awareness of this and how to kind of manage it is really important. It's not so much that we can stop the activation of the process. It's just that we can then manage the process better. And I think this is, again, this is an edge that experienced traders have, is they've been through the highs and lows, and and each time you go through one, either a high or a low, you're getting an opportunity to learn how to manage that for yourself better.
Yeah. That's well said, especially if you survive that that low.
Well, exactly, and this is the key thing. This is all about survival of one high to the next high, and survival of one low to the next low.
Right.
And this is why, again, I think if I come back to what I said earlier about learning being such an important core skill for people, because you want to be learning from the highs. You want to be learning about what made the high in the first place, and how you can maybe extend the high or make the high higher next time. And if the high became a low too quickly, what happened there?
Right.
But also, when we're at the lows, there's lots of learning there as well. So I think all the time, whether you're at a high or a low, if you can kind of keep the lenses open to, what am I learning from this? Then I think that's a real key skill to have, as a performer. And certainly in sport, if you look at the highest levels, that's what they're getting better and better at. They're getting really good at noticing, when we didn't play well, they really get into that, which is natural. But there'd also be, when we played well, why was that? And really being as curious about success as we are about failure.
Exactly.
Is what I would call a differentiator between probably, the great and the good.
Yeah, and that really brings up a couple of questions I'd love to ask about that. Maybe the first one I'll ask is just around, maybe I'll take it this way first. So, you talked about just trading edges there. So, beyond just having a positive expectancy in terms of a system or setup you may be trading, or a playbook of setups you may be trading, what other edges should traders be trying to develop? So you said that one already. It sounds like the one you talked about there is just having maybe resiliency, having the ability to be reflective and learning at whatever stage you are at. Are any other edges you want to call out that people need to develop, or you see in in real peak performers?
Yeah, definitely. I think resiliency is a really important one, as you mentioned. I would say kind of creativity stroke entrepreneurial, kind of this kind
Nice.
of like an opportunity seeker.
Yeah.
I say that's a real kind of edge that people can have, having that kind of real ability to be able to look at things a bit like, I guess like a puzzle, and always looking for, where's the opportunity right now? I think, if you've got that kind of mindset, that can be a real edge for sure.
Yeah.
I think there are people who, for whatever reason, are able to either through genetics or through learned experiences kind of are less reactive to the swings, the emotional and the kind of the stress swings which trading brings. So I think developing the ability to be able to manage the highs and lows at a physiological level can be a massive edge. And I think on a mental side, things like concentration and focus, distractibility, I think is strongly linked to ill discipline. So if you can maintain focus on the right things, the right thing at the right time. So I think attention and a focus becomes, a real key edge. Obviously experience can be a big edge. I would say obviously energy we've talked about earlier can be a massive edge over time. I think another key edge actually outside of the person can be the environment that somebody's in. So, you can have an environmental edge in terms of, where you're sitting, where you're trading from, the infrastructure around you, people around you. So that can be an edge. So, I think there's multiple edges, and certainly one of the things that's been popular in the UK has been this concept of marginal gains, which was a philosophy that came through from the British cycling team, from Dave Brailsford. And it's all really about, this kind of aggregation of lots of, small improvements. And I see that really as being like, small edges, anything, if we're a bit fresher than the guy next to us, or a bit fresher than the guy we're trading against, or if we're that little bit more attentive, if we're a bit more disciplined, a bit more focused, if we're a bit more experienced, if we're a bit more resilient, any one of those may be quite marginal, but it's once you start to put all these things together.
Right.
And this is one of my kind of, I guess, key philosophies when I'm working with people is let's be looking at, what can we improve that you're doing already? What small changes can we make? Yeah. But it's putting all these things together where I think the real magic begins to happen.
Yeah, so well said. I love that idea, by the way, as well, this idea of small gains, because it seems like people are always looking for like the really big gains, right? They just want to see that one pivotal turning moment that everything sort of just shifts and changes, but that rarely happens, right? It's it's kind of a storybook kind of thing. It's not, you don't really see that play out, and it's not sustainable if that happens usually.
As a coach, it's beautiful when you get it. That you do get them every now and again, where maybe sometimes you just change somebody's mindset. You can flick a switch, and that kind of really can send them in the right direction. But the majority of the time, it's change is often, they say it's evolutionary, not revolutionary. Right. And I think that's probably good guidance for most of us is, when we're working to change, and performance improvement for me is purely a focus of its behavior change. We're trying to do things differently to get better.
Right.
So, if we see it as being an evolutionary process around, small changes, small improvements, doing a bit more of this or a bit less of that, or starting something new, or stopping doing something we were doing before. Yeah. It's that process over time, and that's the key thing for people. It's the process that takes effort over time, which becomes the key challenge for most people. Because that comes down to, have you got sufficient drive and motivation to sustain the energy required, to keep applying that effort over the time period required.
Yeah. And that just, when you say that, just what it brings up for me is that sounds like the mark of a professional, right? The person who checks in every day, puts, the required effort in, has the sustained focus and motivation to do the process, versus someone who's maybe a gambler or wants to take shortcuts and just wants to get the results right away without putting in the work. So.
Absolutely. And I think the one, because you bang on there, Houston, and I think the one that, along that line is recognizing, and this is where it's really important, is that at the highest levels, of all the things that maybe need to be done on a daily basis or a weekly basis, not all of those things will be enjoyable.
Right.
So, what we get at the highest levels of performance, and this is true in sport, trading, chess, whatever it may be, the military and so on, is the highest performers are consistently doing a whole variety of things, but within that variety, there are going to be tasks which are going to be uncomfortable or unpleasant, but they will do them regardless because their values and their motivations will be strong enough that it will drive them through those tasks, irrespective of the level of discomfort. Lower down the hierarchy of kind of performers, when people get into situations that are uncomfortable, our natural tendency becomes to avoid. We have an aversion to discomfort. So, we tend to kind of focus on, the trades that we like, or we do the tasks that we enjoy doing, and we're not as good at doing the things that we don't enjoy. And that again is a major distinction between good and great, is who's willing to do what's uncomfortable.
Right. Yeah. And so let's go back again to that idea of, managing our highs and our lows. And, the second thought I had around that was, when you were saying that, to me, it kind of ties into this ability to be reflective, but then also this idea of accepting where you are. So, if you're in a low, you could try to block that out and say, no, this is not really a low. I don't, I kind of suppress or ignore those feelings. But we just talked about there, the greats are the ones who really accept where they are in that cycle, can really be honest with themselves and not, maybe give it a negative spin or even a positive spin, to just be aware and cognizant of where they really are at, without kind of sugarcoating it or making it worse than it is. So a lot of that seems to be, just tied to, maybe one of the elements that you draw in your book is this idea of mindfulness, right? Just being able to be in that moment and be present and aware of the situation you're in.
Yeah, I think this is one of the beauties of because I think mindfulness, it can be quite a big topic, and it can be there's a huge collection of techniques and strategies and practices and so on. But there's also within mindfulness there are kind of some very simple but kind of, I guess, very beautiful principles. And I think one of them is this idea around that your experience in the moment, that's what it is in that moment, and being open to, and you used the word, Houston, which is the absolutely the right thing, which is this idea of acceptance. That in this moment right now, the experience I'm having is my experience, and being open to that. And I think, as you said, at the highs and particularly at the lows where it tends to be harder, if we're not accepting of that, then really what it means is we're either suppressing or we're denying that.
Yeah.
Now, one of the things around being, particularly in a low, an emotional low as such, is you've obviously got a potential whole number of challenging emotions that might be coming through. It could be some anger, frustration, there could be some blame, and if we're not open to that, then those emotions stay within us. And any emotion that's kind of inside us, kind of lingering around, is very likely to kind of have an influence on our next decision, our next trade, on our next investment. So we need to be, one of the skills of dealing with the highs and the lows is having an awareness of what's going on, and also having this acceptance. This is where I'm at right now. Once you kind of in a mode of acceptance, it's much easier to move forward into what's the appropriate action to take. But also, as you're taking that action from a situation of acceptance, you're doing it with less influence from the emotions that may be affecting you. And that could be excitement and euphoria at the highs, or it could be obviously fear and anxiety at the lows.
Right.
But without the acceptance, then we're in denial and suppression, and that's not a great place to be.
Yeah, so true. Because only with acceptance can you maybe prevent things from snowballing out of control. Like if you're sliding downwards, then you don't want to increase the pace or the velocity of that slide. And likewise, like that stories of
Mm-hmm.
people running up accounts and then running back down just as quickly. It's the same thing, right? People are just not really maybe being aware of exactly where they are where they're at that point, and just letting it kind of take over, and things kind of go parabolic at that point.
Yeah, I mean, it's I think if we're not in acceptance, then we're in aversion.
Yeah.
And if we look, we all know that in trading, one of the big challenges is loss aversion. We don't like taking losses. Why? Mm-hmm. Because they're uncomfortable. So we've got an aversive response. But if we were accepting of the the sensations of discomfort. And if we were more open to that, then by nature, we would reduce our aversion. So immediately, we would have a big shift in our trading behavior. If we were more open to the discomfort of feeling regret, then we would get a big shift in our behavior. If we were more open to accepting the feelings of uncertainty, and the anxiety that brings, if we were more open to that, immediately we would get a big shift in our behavior. So, I think for all traders, one of the big challenges, and this is where I think mindfulness has quite a bit to offer, is in this relationship between what we've got aversion to and the impact on our trading behavior.
Yeah.
And, on the flip side, being more open to that, being more willing and more accepting of that experience, and learning to be open to and experience and manage those discomforts. And I think when people can get to that, that's where they can see real tangible shifts in their trading behavior.
And so maybe at this time, I'll just give your book a quick plug, because I think the book is TraderMind. And I'll let Steve talk more about it, what's inside that book, because it's a pretty big, it's a thick book. It's got a lot of stuff in it. It's really packed. But a lot of, elements in that book have to do with, incorporating mindfulness into your trading. And Steve goes at it from a very practical perspective. It's not just, a kind of airy-fairy approach to incorporating mindfulness, but it's really very practical. And he has some really good exercises. There's mindfulness in there. There's also just a bunch of stuff around behavior and psychology. But maybe, Steve, I'll just let you maybe just quickly talk about, the book, which came out, I think, in 2014. Is that right?
2015, last year.
2015, I'm sorry.
Oh, no, sorry, my apologies. Let me think now. No, it might be in 2014. You might be right.
Okay. Close enough.
Yeah. You probably know more than I do. So the book, it evolved really, Houston, from a growing, I guess, curiosity around mindfulness in general, which probably started for me in about 2009. Having read a bit, seen a bit on some of the neuroscience papers, been to a few conferences and talks, did some studying myself. Did a whole number of courses as a student, then became a teacher of mindfulness. Started experimenting, using it with my trading clients. They really enjoyed the techniques, because it was actually things that you could actually do. They were physical practices rather than just kind of theories and concepts.
Yeah.
And as I guess over the years, they became my guinea pigs. So I kind of tried it out on more and more people in different ways, blended it into my current approaches. So it's kind of, I guess, the book's really based around a combination of factors. Of one, I think, mindfulness now is quite mainstream. So I've kind of, the timing was good to kind of maybe cover that topic for traders. I think traders and investors were curious about it from what they were reading. The sort of the practical experience I had working with my own clients was really positive in terms of their feedback and the gains they noticed. So I just tried to really package all of that into a book. And I always, through my approach, I always kind of favor a practical type approach. I try to make that pretty central, because mindfulness can be seen, I think, you said the phrase a bit airy-fairy, it can be seen in that way a little bit sometimes. So I try to make sure there's plenty of kind of solid research in the book. So it's probably slightly more research heavy than my first book, because I was conscious of trying to make sure people kind of really got why it was important and some of the neuroscience behind it.
Yeah.
And then, like you say, what I've also done, it's not a pure mindfulness book. It's a mindfulness-based book. There are some approaches from acceptance commitment therapy, from performance psychology. There's a bit of visualization in there. Like I say, some work around kind of habits and behavior. So it's kind of mindfulness-based, but it's not, mindfulness in its entirety.
Yeah.
And I think, we've got in there, it covers stuff around how to use mindfulness type approaches for managing thinking, dealing with stress, pressure, emotions, energy, the highs and lows, the winning and losing that we've touched on. And then at the end of the book, I've tried to kind of put in for people like a little 8-week program. So, once you've read the book or as you read the book, to try and build the idea around it. Mindfulness is about, it's a practicing, it's a skill. So it's all about the practice. So that again was an intention behind the book, was to encourage people to, adopt a regular practice, even if it's just a few minutes a day, but to do something, regular but often.
Do you have any, I'll put you on the spot here, but do you have any techniques or practices you can share that would help people maybe who struggle with maybe impulse control or maybe issues around self-control or discipline?
Okay, so I think when we look at impulse control and discipline, what's often happening is that there's a lack of awareness, fundamentally. So so we're not noticing it until it's too late. So to reduce impulsivity? Well, yeah, there's many ways, but just one way we'll look at. But I think the fundamental skill is awareness. Now, this is a very quick and simple technique. It's called the triangle of awareness. So if you imagine an equilateral triangle, and then at the top apex we have body sensations, and then along the bottom the two apexes, we've got thoughts and emotions. So they're kind of three components of our experience that we have from moment to moment. So, as we move from this moment into the next moment and into the next moment, we might be noticing shifting in our body sensations in terms of heart rate, breathing, muscle tension. We might see shifts in our thoughts. We might see shifts in how we're feeling. So a good kind of starting point for mindfulness is to take the triangle of awareness and then regularly during the trading day, maybe it's every hour to begin with, set an alarm on the phone or on your computer, and when it beeps, just take a few moments and just work your way through that triangle. Just check in. What am I noticing in the body right now? What am I noticing in my thinking right now? What am I noticing in my feeling system, emotional feelings, physical feelings right now? And just beginning to bring that awareness, and then what you can start to do, if you want to go further, is take that as an actual technique. Take 2 or 3 minutes and actually sit down and spend 2 or 3 minutes working through the triangle. So just really learning to begin to be in your experience and noticing what's happening while it's actually happening from moment to moment, and being aware of these shifts. And that's fundamentally what mindfulness is about. It's about developing this moment to moment awareness, noticing what's happening while it's happening. And then what happens is when you've got an impulse or an urge, which we all get, most of us, we don't really recognize it till the impulse or urge is really strong. So our awareness is it's coming too late. So now the impulse is strong. It feels really uncomfortable not to act on the impulse. So to get rid of the discomfort, we take action on the impulse. So we kind of get a short-term gain. It feels good acting on the impulse. The challenge in trading investing is that now often the impulsive behavior in the short term leads to a long-term negative effect. So, we might be in a winning trade, we get the impulse to jump out of the trade, we get out of the trade early, and then we see it go on to our profit target. Or the impulse might be to stay in a losing trade to avoid the discomfort of losing. So then we stay in the trade in the short term, feels better, but in the long term, the trade becomes a bigger loser. So, what we need to be able to do is to be able to get better at identifying the shifts and changes in our experience earlier. So it's all about having that awareness. And then, particularly with impulses and urges, once you start to notice an impulse or urge, it can be very interesting to pay attention to where that impulse or urge is in the body. So kind of get into the body. And then there's a great technique I talk about in the book called urge surfing. It came from some work in addiction therapy, where they get addicts to be aware of the urges to either smoke or drink or take drugs. And the whole idea really is that the urge starts a bit like a ripple in the ocean. The urge gets bigger and bigger and bigger. So the wave kind of increases in size, and it's at the peak of the wave when we're most likely to act on the urge. But if people can get better at noticing the urge earlier, then that has a big impact on their kind of, their success rate of kind of riding the wave as such. Once you're on the wave, if you're able to kind of maintain awareness of the urge, then that also again helps you to get through the experience. So, I think just that basic awareness is critical. And you can use it at any time. If you start to, we've all got moments in trading where we're more at risk than not, So once we know what our crucial moments are, they're the times to check in. What's going on in my body right now? What's happening with my thinking right now? What's going on with the feeling system? Because the more aware you are of any of those 3 points, the less influence they have on you. This is really, I guess, I've done it in a very long-winded way, I think, but this is really the key thing: is the awareness reduces the influence of those areas.
And what I'm also hearing you say is that you're not actually trying to change those impulses, right? Like, you're not trying to get rid of the feelings or emotions that are bubbling up, which is, I think, some people try to suppress them or ignore them or maybe try to, control them. You're simply trying to apply some awareness to it to create kind of that space to maybe make better decisions or to maybe change your course of actions.
Yeah, you've picked up on a really key point there, which I'm really pleased you've done. Yeah, we're not into. I guess in old psychology, we talk a lot about, control emotions, control impulses, control thinking, and so on. I think we're in a shift, which is being led a bit by neuroscience, and I think we see this replicated in the mindfulness type studies around. This is again going back to the acceptance and noticing and being aware of and open to, and we're experiencing it without the need to have to control it.
Right.
The challenge with suppression, whether it be of an impulse or whether it be a thought or whether it be an emotion, is that suppression is energy hungry. So it's a bit like if you imagine holding a beach ball.
Yeah.
Suppression is the equivalent of, you've got a beach ball, you're in the water, and you're holding the ball under the water. So the ball hasn't gone away, the ball's still there, and you're using energy to hold it under. But what it means for us as traders is, when we're in suppression mode of either thinking, emotions, impulses, whatever it might be, we're taking our attention internal, and what it means is we lose situational awareness of what's going on around us externally. So we start to miss out on what's going on the screens around us as we go internal in suppression, and we're using up vital brain energy by doing that. Then, obviously, what happens eventually is, at some point, if we then, at a later date, forget about what we're doing, we take our hands off the ball obviously now comes flying out of the water with energy. And this is what I talk about when traders are involved in revenge trading, or when they're kind of chasing losses, or where they get kind of overexcitement and too much euphoria. Is if we try and suppress these emotions or these impulses, they don't go anywhere. And they've got to come out later at some point, and they come out with greater charge. But if we can, so the metaphor would be basically, I guess, if we can have the beach ball but have it on the water. So we're aware that it's there, we're not trying to suppress it. Likewise, we're not playing with it, we're not throwing it in the air and indulging it, but we've just got an awareness that it's there. Then we can take anything that could be useful from that, because particularly with emotions can give us quite interesting data about what's going on around us.
Right.
But we don't have, but likewise, we're not using up any more energy than we need to, and we're not getting the adverse effects of it, which I think is really critical.
Nice. Yeah, that's very, very helpful, because you're right. Like, I think the old school literature has always been to try to somehow control or suppress our emotions. But as you just said there, the emotions are just another stream of information that can yield a lot of interesting tidbits.
Yeah, I mean, if when I do work with traders on emotions, the classic example I would give to people is fear. If we look at the emotion of fear, for sure, we could all Google or go into our search engines, type in emotions and trading or fear and trading. We would find multiple articles around kind of how to trade without fear.
Right.
And I would say, okay, great. Okay, so let me give you a situation. Let's skip outside of trading. Let's imagine, a book called Live Without Fear. And again, there probably have been books like that or very similar.
Sure.
But then we have to look at, okay, well, if we have fear, if we look at it purely in evolutionary terms, there would be no sense in us having a feeling that was unimportant. So we wouldn't have this evolution. We wouldn't have fear unless at some point we needed fear.
Yeah.
So what does fear do? Basically, fear is the way that it's the emotion we get when the brain has detected a potential threat. And before we had the cognitive brain, before we had the higher brain, and we were working purely from from emotion as such, we would be we'd be out, we'd sense some danger. Very quickly, the brain would alert us to the danger through the emotion of fear. That would then mobilize energy so that if we needed to, we could then also go into fight, flight, or freeze. Now, if we were humans without fear, most of us would be dead by now. If we were traders without fear, it would be exactly the same. Why would we not want to be aware of the risk in the market? Because that's what fear tells us. It's telling you about potential risk. On the flip side of that, excitement. When do we get excited? We get excited when we see a potential opportunity. It's a reward alert. So, when we're out and about, wherever we are, if we detect an opportunity, it might be, we're in a bar, and we might see, it could be, with a potential partner in a bar. It could be, it could be on the trading screens, a setup coming up. But we will know that there's an opportunity because the brain will, quicker than we can think it, will detect that. It will come through the limbic system, and then we'll get this feeling of excitement, which again mobilizes energy, so we can act on it should we wish to. So, as you say, emotions are basically they're data. It's a continual stream of data. It's information processing from the world around us, faster than conscious thought,
right.
And critically, it's also mobilizing the energy so we can act on it. So if we look at fear and excitement, essentially, they're two emotions that often traders go, I don't want to get any fear, I don't want to get too excited. But without any of that, you would miss out on fundamentally what trading is all about, which is risk and reward.
Yeah, you'd have nothing left.
Nothing left, exactly. And even if you consciously identified the threat, or you could consciously identify the opportunity, you'd have no energy mobilized to act on it.
Right.
Yeah. So the goal is not to be without these impulses or emotions, but is to be able to work with them much more effectively. For sure, at the extremes, they can definitely get in the way. So we need to be able to regulate and manage, but we don't want to be in the absence of either, because they actually can provide a real edge in terms of our situational awareness, what's going on around us.
Well said. Well said. So maybe there's one final talking point that I'll try to weave in here is, how does this kind of tie into then the role of intuition? We hear a lot of traders, especially you quote in your book and you bring out a few really good examples of, some of the trading greats, like George Soros. I think he used as an example of him using, of making some gut decisions and trusting his gut to make these trading decisions. How do we weave that in with, what we've been talking about? Is emotions and intuition, do they play together? Are they connected? What's your thoughts around that?
Yeah, definitely connected, because again, we're into that kind of the feeling system.
Yeah.
The feeling system is kind of very fast. I guess with intuition, there's people who tend to be in one or two camps, and I'm always curious when I do workshops with traders. I'll always kind of ask, who's in favor of intuition and kind of who's against it. The fact of the matter is, we've all got intuitive capabilities because it is coming in through the feeling system. And if we kind of go to gut feel, we know that gut feel is a real physiological entity. And again, as you mentioned in John Coates' book, Hour Between Dog and Wolf, that's something he talks about in there. So we know that the neurobiology of gut feel is real. So we've got these kind of, I would call them unconscious intelligences. They're signals that we're getting about what's going on around us. And certainly, if I speak to experienced people in special forces, as exactly the same as with experienced investors and traders, they will all talk about how it plays a role in their decision making. I would clarify that it's not always the main factor. So it's not they're acting purely on gut feel, right. But likewise they're not ignoring their gut. So typically with fund managers, I'll hear they had a feeling about a stock, maybe they felt it might be good, but they would then go and check it out. So they're kind of combining the intuition, the feeling, and then they're combining that with some thinking in terms of going and actually physically checking it out. Or maybe they get a feeling about this doesn't feel quite right, or it doesn't look quite right. Again, I'll check it out, maybe do a bit more research, speak to somebody. Do you know what? Actually, I may have been right, it may have been wrong. But I think it's kind of it's another part of the arsenal of the toolkit that people can have should they wish to use it. And I think particularly as you go to maybe shorter time frame trading, where it's kind of much more of a flow type experience, where right. You probably are much more kind of in sort of in the zone, there's much more feel to it, then probably things like pattern recognition, things that have been learned implicitly outside of conscious awareness, all start to probably play a much, much bigger role. So if you're a 3 to 5 year time horizon investor with kind of going to corporate meetings and lots of research and analysis, maybe it's a little bit less of a function of what might be there. But you might still get some hunches, intuitions, and gut feels about people in meetings and kind of how things are going. So, but it's not magic, you know. It's developed through experience. It's basically where you're learning things implicitly without knowing you're learning them, and then you're then getting signals, you know, from the brain, from the gut, as there are, you know, familiarities that are coming in your kind of present moment experience. So I would say certainly, if I looked at the top traders I work with, there's probably a bias towards those people utilizing in some way, you know, intuition or gut feel, or it's saying it plays, you know, at least some role in what they do.
Fascinating. And I wonder with those individuals, I wonder if it's something they actually, is it something that they're harnessing or trying to allow to show up versus try to blocking those things out, right? Like you talked in the beginning about some folks, you know, they try to deny any existence of intuition, so they just want to play by the rules or their trade plan. And then you maybe have that flip side where folks are like, you know, I'm going to listen to this and I'm actually going to cultivate it and see what comes out and see if I can actually harness it.
Yeah, I think that's the decision that we've all got to make for ourselves. Is, you know, it's almost like we've got the ability there, and some people are, you know, through genetics or through learning, a kind of, you know, or through that, you know, through the kind of where they've grown up, are much more open to that and much more used to it, or not so. So, you know, some people are very, you know, very quantitative, and it's all about, you know, it's got to be kind of very rational and kind of very measured. And those people generally, you know, less likely to maybe be intuitive. Other people are a bit more kind of qualitative and kind of much more, you know, using the feeling system and, you know, and maybe more in tune with that. So there will be some kind of, I guess, genetic stroke kind of cultural differences in people's upbringing and so on, openness to it. And then the word you use, which I think is a great word, you know, is cultivate it. I think for the people who are open to it, then the skill is actually, can you make it into an edge? You know, so can you actually not just make it something that's there, but can you actively make this an edge? And then really it's about, well, how do we cultivate it? So, you know, it takes time, so you can't just kind of turn it on and it's there. It's very domain specific. So, you know, your intuitions around maybe trading stocks could be different to FX. You know, you'd need to be kind of specific to the domains, to the markets you were trading. So you'd need to build up your kind of experience in those specific fields. It can't be, you know, just globally spread around everywhere. So you need immersion to do that. So you need to put in lots of hours and practice. You probably want to get into some kind of analysis and reviewing. So, you know, maybe if you act on an intuitive hunch, you know, record it, what happened. If you didn't act on it, record it, what happened. So you need to kind of build up that data bank to kind of really get a feel as to whether you can trust it and rely on it or not enough. And you can also do things like, you know, like mental rehearsal and visualization. They can also help you to kind of build that intuitive feeling, you know, by replaying situations or pre-playing situations. So, you know, it's just about getting enough market hours to really build that feel.
Great advice.
So cultivation, I think, is absolutely the right word.
Great advice. And so maybe I'll just pull out one final passage from the book. And, you know, I thought about this before, but I never verbalized it. And, you know, you quote Denise Schill on this, but how do you tell the difference between, you know, intuition versus just an impulse? Do you have any thoughts around that you can share?
Yeah, well, I'll just share with what I read in Denise's book, which is Market Mind Games, which is a great book where she kind of talks about, you know, I guess the distinction is it kind of a slow moving kind of a type feeling, or is it something kind of almost an aggressive-y type, you know, got to do it right now type feeling? Right. So, you know, and I think, you know, again, it's hard, you know, we can't quantify that, and it's even quite hard maybe as an individual to work out what it is. Yeah. But I think just having that in mind in terms of almost sort of like a slow burner versus a, you know, kind of a quick, kind of almost grabbed me, jumped on me, and I've got to act straight away. Right. Having that almost at the two ends of the continuum, I think it's just a useful differentiator. Because again, it's the question we've all struggled with is, well, how do you know which one it is? You know, is it intuition or is it intu-wishing? You know, that's
right,
one that I think has been used in trading a little bit. So, but again, this is where the experience comes in, you know, and I think Another thing actually we could use as a differentiator, just come to my mind, is that if emotion or stress levels are high, then for most people our intuitive abilities are probably reduced. So at emotional highs or at kind of stress level kind of highs, then we probably want to be a bit more wary about our intuition, and that's where maybe it's going to be a bit more kind of it's jumping on us, it's a bit too it's a bit more quicker, it's a bit aggressive, whereas in our kind of our middle range of our normal operating system, we probably get much more of that kind of the slow burn, the sensing, the feeling, which is kind of that much more truly intuitive type feel. Great distinction there.
And I think I'll just tie in again. I think you just need to have that awareness, right? If you can't recognize these things you're just describing, then there's it's very, very difficult to be able to tell the difference. So just cultivating that awareness is probably the most important skill.
It is, and again, this is absolutely. And one way that there's in the body. So we all know about the 5 main senses, and then there's our 6th sense, which is basically called interoception. So interoception is the ability of the brain to read the signals coming through from the body. And it's very high in athletes, and it's very high in special forces soldiers. So they've got very good mind-body connection. Now, interoception can be developed through mindfulness practices, particularly ones where there's movement involved. So I think there's, you can do mindful walking, you can do mindful exercising, mindful stretching. Yoga would be a good example. Also, mindfulness practices where we are tuning into the body, a practice called the body scan. And what we're basically training ourselves to do is to be more open to the signals in the body. Now, my sense is that where people have got stronger levels of interoception, where the 6th sense is higher, then probably gut feel and intuition are going to be stronger. So, I think, again, intuition is an ability we've got. You use the word cultivate, so we could use mindfulness-based practices, particularly the body-based ones, to cultivate that through a very tangible process. So almost to accelerate our ability to get it. So it's a bit almost like a radio signal. It's like we've all got the radio signal there. And I think what the cultivation process does, Houston, is it kind of, it cleans it up, makes the signal stronger. And I think, when the signal's stronger and clearer, then we're much more open to maybe, bringing it into our decision making.
Yeah, that's beautiful. Yeah, that's a great point. So let's begin to wrap things down. So I know you've written a couple of books. Do you have any other projects that you want to share, or the things that you're working on now that do you want to share with the audience?
Yeah, just I guess a couple of things very quickly. One is we touched on it already earlier, but I think there's some really interesting work that I'm doing, some research around looking at the physiological side of trading. So what's going on around stress, recovery, activity levels. Certainly with my institutional guys, we see a lot of high demand scenarios, an absence of good recovery. So we're looking kind of how to increase energy, how to build recovery. Again, we're all built around this idea that no matter how good the capability is, we want capacity to be higher. And what we're seeing is energy is a big part of that capacity. So I think it's some really interesting stuff to do around that. And I think even for people trading from home, be aware of your energy levels, be aware of the times when you tend to have more energy or less energy, the things that draw on your energy, the things that give you energy. No matter how good your brain is, it still needs fueling, and it's taking that fuel from the body. So, I think that's a real key thing. Don't overlook and don't play down the importance of energy in terms of your trading. And then really, I guess the other thing is just potentially maybe another book on the way, as I mentioned briefly before. Again, I think I'm really interested in this idea around the nervous system and what's going on in the nervous system, like John Coates has talked about in his book. But then really, John did a great job explaining kind of what was going on. And I think the next level now really is, and now, some tools and techniques and some practices to really help to manage that. So I'm quite keen on maybe putting something out over the next year or two around, what we could do on that domain.
I love that angle. I'll be watching. So Steve, do share with us as your work progresses, because I really respect the work you're doing. And again, I'll just give your book a plug again. It's TraderMind. I'm putting it on one of my top recommended books around trading psychology. It's probably one of my favorites right now. But I'm curious, do you have any books that you really like, whether it's trading related or non-related to trading? Are there any books that you often recommend to people?
I've got an extensive. I'm looking now. I'm sat in my office and I've got literally 4 bookshelves. Probably, I don't know. There must be 200-300 books up there.
Pick a couple.
And I've got another 65 on the Kindle. So I'll give you a quick selection of ones. There may be too many here, but this is some things that came to mind.
Yeah.
I think the Market Wizards books and Hedge Fund Wizards books by Jack Schwager, fantastic. They think there should be a definite read for people. I think all the books that Brett Steenbarg has done have been superb, on the trading psychology front. Likewise, we mentioned Denise Shull, her book, Market Mind Games, great book. John Coates' book, which you talked about, Hour Between Dog and Wolf, also a great book. Slightly away from trading, there's a great book called Mindset by Carol Dweck, who's at Stanford. Phenomenal book, definitely in my top 10 books of all time. There's a great book around attention, focus, and maybe kind of with a mindfulness crossover called Focus by Daniel Goldman, which is, again, I think is a superb read. There's a guy called Matthew Syed, ex-table tennis player turned sports writer, writes for the Times here in the UK. He's done 2 brilliant books, one called Bounce, all about kind of talent and talent development, and his latest book called Black Box Thinking, all about kind of failure and success.
Wow, okay.
And on the mindfulness side, probably Full Catastrophe Living by John Kabat-Zinn is obviously a classic in that field. And another book is a bit of a curveball, but it's one that I just absolutely love. It's a book called Rise of Superman by a guy called Stephen Kotler. I don't know if you've read that, Houston, or not.
I have. It's a great book.
Yeah, it's one of my favorites, all about flow and kind of, it's just phenomenal. So that's one of my favorite books that I read last year. So it's, and I think there's not maybe as much in there that's easy to draw down for the trader, but I think just some of the ideas around flow and kind of peak performance and the neuroscience behind flow, just just So I think it's just a really interesting read.
Great titles. Thank you for sharing. So just one final question. So if people have enjoyed this conversation we've had today, Steve, what's the best place they can stay in contact with you? If they want to reach out to you or follow you, where's the best place people can go and do that?
Yeah, just through the website really, which is www.highperformanceglobal.com.
Awesome. It's been a beautiful conversation today. I really had a lot of fun, Steve, so I appreciate your time today.
No, thanks for the invitation. I thoroughly enjoyed it, and thanks very much again.
You bet. So, as usual, you can find the show notes, transcripts, and all the resources. So I'm going to take all the books that Steve mentioned there, I'll put them on the resources page, and you can find that at thetradingedge.org/episode 22. Thanks again. Take care.
You've been listening to the Trading Edges podcast. We've taken this interview and summarized all the big ideas so that you can take action. Just head over to thetradingedge.org/podcast to find the show notes, transcript, resources, and to continue the conversation.